Good morning. Okay, today we should continue with journal entries problems. Okay, today we should continue with problems. I want every one of you to take down the question in your ledger book. Okay, so let me read out the question. Generalize the the following transactions in the books of in the books of Himanshu. In the books of Himanshu. First transaction, December 1st, Ramesh started business with cash rupees 50,000. With cash rupees 50,000. December 3rd, purchase goods for cash rupees 7,000. For cash rupees 7,000. Next, December 5th, sold goods for cash rupees 5,000. December 6th, sold goods to Sohan on credit rupees 5,000. Next, December 7, paid wages rupees 4,000. December 10, received commission rupees 2,000. Next, December 10, paid salary rupees 2,000. Next, December 12, goods written by Sohan rupees 1,500. By Sohan rupees 1,500. Next, December 18, goods written to Mohan rupees 1,000. Okay, next, December 21st, cash received from Sohan rupees 1,200. Next, December 25th, purchase furniture from Deepak rupees 5,000. Okay, now let us solve the problem of journaling. Okay, here there are two ways to pass the journal entries. In the last class I have explained, in the last videos I have explained, there are two ways to pass the journal entries. Which are those two ways? Okay, so traditional approach, okay, and modern approach. Traditional approach and modern approach. Okay, traditional approach is also known as English system. Traditional approach are English system. modern approach are American system. American system. Okay, you had learned. And traditional approach, there are 3 golden rules of accounting. Okay, there are 3 golden rules of accounting. Here, personal account rule, okay, a real account rule, and nominal account rule. Okay, we had learned in the previous class. What is the rule under personal account? Debit the receiver, credit the giver. And for real account, debit what comes in, and credit what goes out, right? And under nominal account, what is the rule? Debit all expenses and losses, credit all incomes and gains. These are the rules which you had learned. And if it is related to persons, natural person means those who have body and soul. For example, Ram, Rahim, Sham, Geeta, all these are people, those who have body and soul. Here we apply which account rule? Personal account rule. And for artificial persons also. So when do you follow personal account rule? When it is a natural person, okay? When it is artificial persons means it will have name, but it will not have soul. They will have name. For example, HDFC Bank, it has name. It can enter into transaction through its common seal, but it is not having soul. For example, take up Al-Amin College. You have made payment of fee to Al-Amin College. So you are having fee receipt in which Al-Amin seal and signature is there. That means you have paid fee to Al-Amin College. So it's an artificial person. It's an artificial person. For example, companies, Infosys, Wipro. Okay, take up any companies. All these are called as what? Artificial persons. Next is representative person. If it is a representative person also, you follow which account rule? Personal account rule. What is representative person? Why I am explaining this again is, one student had doubt. He told that the video is blur and he cannot hear my voice clearly. So I am revising once this. Next is, if it is a representative person, even then you follow personal account rule. Okay, so representative person means it should represent artificial person or real person. For example, salary payable. I have not yet paid the salary to one worker in my business. So, to whom should I pay? To whom it is representing? Salary payable. To whom should I pay the salary? It is representing whom? It is representing some natural person. It is representing whom? It is representing some natural person. So, it is known as what? Representative personal account. Okay. So, I will write it down here so that it will not be confusion. So, when do you follow personal account rule? When it is related to natural person, okay, artificial person. Artificial person means Al-Amin, Vijaya Bank, Canara Bank, okay. So, Wipro company, all these are what? Artificial person. If it is representing artificial person or natural person, it is known as what? Representative personal account. Okay, real account and real account. So, when do you follow real account rule? If it is related to assets. Assets means properties owned by the businessman. Okay, so when do you follow nominal account rule? If it is related to expenses and losses, and if it is related to income side gains. E stands for expense, L stands for losses. Okay, and income side, I'll write it down. Expense side losses. Okay, income side gain, income side gain. Okay, so one more method you have. This is one method. This is traditional approach. Okay, so any one method you can use to solve the problem. Both will give you the same answer. Any of the methods you can use. Okay, next you are having modern approach. Modern approach. Okay, the other name for modern approach is what? American system. American system. Right. So for here what are all the rules? For assets, expenses and losses, the rule is similar. The rule is similar. Increase in assets and I'll write the short form here. Expense and losses should be debited. And decrease in assets and expenses and losses should be credited. Increase should be debited, decrease should be credited. Okay, for recording changes in liabilities, capital, revenue and gains. So this is one rule. Okay, and the second rule is for capital, liabilities and for revenue and gains, the rule is similar. Okay, so increase should be increase in capital, liabilities, revenue and gains should be credited and decrease should be debited. Increase should be credited and decrease should be debited. This is the rule which is to be followed for preparing journal entries. This is the rule which you have to follow for preparing journal entries. Either this rule or this rule. For assets, expenses and losses, increase should be debited, decrease should be credited. And for capital, liabilities, revenue and gain, increase should be credited and decrease should be debited. Okay, so these are the rules. Now I will solve problem according to the modern approach, that is the American system. Let us solve the problem according to the American system. Later I will show you the traditional approach. Okay. Now, here with the help of here in accounting equation we tried to define items in plus and minus. Okay, in accounting equation in the previous classes we have tried to define items in terms of what? Plus and minus. But in accounting, but in real life we don't use plus and minus. In real life we don't use plus and minus. Instead what we use? Instead we use what? Debit and credit. Okay, there are various conditions for debiting and crediting. Now we are learning modern approach. Okay, so there are various conditions for debiting and crediting. Now under modern approach, okay, so we can solve problems here. It is based on accounting equation. Okay, we can solve problem here based on the accounting equation. You know what is accounting equation? What is the accounting equation? Capital plus liabilities is equal to what? Assets. Is equal to what? Assets. Right? So always your capital and liability together, this together will be equal to what? Together it will be equal to your assets. Okay, always assets will have debit balance. Assets will have what balance? Debit balance. Debit balance. And liabilities plus capital will have what? Credit balance. Okay, CR stands for credit. DR stands for debit. Okay, so always assets will have what? Debit balance. Okay, so just now I have explained you the rules. For assets, expenses and losses, the rule is similar. What does the rule tell? Increase should be debited. Increase means plus. Increase should be debited. Okay, DR means debit. Decrease has to be credited. Decrease has to be credited. Here opposite. Increase should be credited. Decrease should be debited. Okay? Decrease should be debited and increase should be credited. So you have learned under American approach. For assets, expenses and losses, the rule is similar. Increase should be debited, decrease should be credited. And for capital and liabilities, the rule is similar. Increase should be credited and decrease should be debited. Okay, now let us solve the problem which I had given. So, what is the first transaction? Ramesh started business with cash rupees 50,000. What is the first transaction? Ramesh started business with cash rupees 50,000. Okay, let me put the format of the journal entry first. Journal entries in the books of Himanshu. Journal entries in the books of Himanshu. In the books of Himanshu. Okay, so date, particulars, LF, debit, DR stands for debit, CR stands for credit. See, as per your requirement, you can make the columns. For date, you can use less space. For particulars, take more space. Okay, for LF is less space is sufficient, and DR and CR. See, date column is meant for recording the date of the transaction. Date column is meant for what? For recording the date of the transaction. And particulars column is meant for recording the details of the transaction. Here you record details of the transaction, whether it should be debited or credited. Okay, LF stands for ledger folio. What does LF stands for? Ledger folio. DR stands for debit. CR stands for credit. Okay, hope you all have understood this. Okay, first transaction. What is the first transaction? Ramesh started business with cash rupees 50,000. Ramesh has started business with cash rupees 50,000. Due to this transaction, so I told each and every transaction will have two effects. Take up any transaction, it will have how many effects? Dual effect. It will have two effects. Okay, here Ramesh has started business. Himanshu has Ramesh started business with cash rupees 50,000. Okay, so Ramesh has started business with cash rupees 50,000. So due to this transaction, what is happening? Cash is coming into the business. Cash is coming into the business. And what is happening to my capital? My capital is also increasing. Cash is my asset. Cash is my asset. So below asset I am recording this. Okay. And also increasing. So below capital I have written, and my cash is also increasing. By how much? 50,000. Even my cash is increasing. Okay. So here, see, if I rewrite this, formula is capital plus liabilities equal to asset. Ramesh has started business with cash rupees 50,000. So what is happening? Cash is coming into the business. And what is happening to my capital balance? Even my capital balance is increasing in the business. There is no effect on the liability. Okay? My capital is increasing and my cash, it is asset. Even this is increasing. Increase in asset should be debited. Increase in asset should be debited. Increase in capital should be credited. Increase plus means increase. Minus means decrease. Increase in capital should be credited. So what should I debit? What is the date of the transaction? December 1st. Okay. So what should I debit? Cash account debit. Cash account debit to capital account. 2 here refers to what? 2 refers to credit. 2 refers here to what? Credit. See, after writing the debit entry, okay, leave some space and start the credit entry. 2 refers to what? Credit. 2 refers to what? Credit. Okay, after leaving some space, start the credit entry to capital account. How much money? 50,000 cash, and even capital is increasing, okay, to 50,000. Below the journal entry, this is known as journal entry. Okay, this is journal entry. You will write a brief explanation to the entry. You will write the brief explanation to the entry, that is called as what? Narration. This is called as what? Narration. What are we doing here? Business started with cash rupees 50. Business started with cash. Okay. So this is the brief explanation to our entry. This is called as what? Narration. This is called as what? Narration. Okay. Now moving on to the second entry. Okay. What is the transaction? Second transaction is what? Purchase goods for cash rupees 7,000. Purchase goods for cash. See, I have got the board. I don't remember the dates. Okay. So I will write it as first, second. Purchase goods for cash rupees how much? Purchase goods for cash rupees 50,000 is the second entry. Okay. So let me write this. Purchase goods for cash rupees 50,000. What is happening here? So, when the business, when it is purchasing goods, what is happening? My cash is declining. My cash is declining. And what is happening? My stock of goods is increasing. My stock of goods is increasing. Right. So, my goods are increasing. And my cash is decreasing. So, goods is also a asset. I cannot write here goods directly. Instead, what should I write here? Instead, I should write it as what? So, what I am doing, I should write the event name. I should write, see, so far in accounting equation, while solving problems of accounting equation, I was using goods. Okay, but here, while passing journal entry, I cannot use goods. I should write the event name here. See, I can even purchase goods or I can sell goods. What am I doing in this transaction? I am purchasing goods. What am I doing? I am purchasing. Okay. So, what you should write here? Purchases. What you should write here? Purchases. Okay. So, I am purchasing goods here. So, write the name of the event. You cannot write goods here. Why? Because in accounting equation, immediately you are calculating profit and you are adding back to the capital. But here, under modern approach, while passing journal entries, you are not adding what? Profit to the capital. What we are doing, for example, see, the value of goods, okay, the value of manufacturing goods is 1000. but we are selling these goods for rupees 1200. We are selling these goods for rupees how much? 1200. Okay, so we have purchased this for 1000. We have purchased these goods for 1000 and I am selling these goods in the market for 1200. So how much is the profit? 200. Okay, this see, for every item I cannot ascertain the profit. What happens? My accounts will become mess. For every item, for example, I am selling cold drink, 50 paisa profit I have earned. I am selling this chocolates, 1 rupee profit I have earned. I can't do all. It will be a hectic job. So what I do while passing journal entries, I just write. See, I have purchased these items for 1000 and I am selling this in the market for 1200. 200 is the profit. I will not add back this to the capital. What I will do instead, at the end of the year, easily I will get to know what is my total purchases of the total month, what is my total sales of the month, and easily I can ascertain the profit. Easily I can ascertain the profit without any burden. So what I am doing, I am not adding profit to the capital balance here. I will not add profit to the capital balance here. But in accounting equation, we were doing that. In accounting equation, we were doing that and we were writing goods only. We were not categorizing goods as here in journal entries. We are categorizing goods as what? Purchases and sale. But under accounting equation, we were not categorizing goods as purchase and sale. We were not doing, right? You are aware. And we were adding capital profit every time. Whatever profit we used to get, we used to add to what? To the capital balance. But under journal entries, what we are doing? We are categorizing goods. What? In purchases and sale. We are writing the name of the event. We are writing the reason. Okay, whether we have purchased goods or we have sold goods, and we don't ascertain profit. Okay, so at the end of the month we can ascertain, or at the end of the year we can ascertain. So in this way we are taking. Okay, hope you all have understood. You need not get confused. In journal entries, just you have to categorize goods in the form of purchase and sale. You have to categorize goods in the form of purchase and sale. Okay, so this is purchases. So my purchase of goods is increasing. Okay, my goods purchase is increasing. Increase in asset should be debited. Increase in asset should be debited. And decrease in asset should be credited. Decrease in asset should be credited. Increase should be debited. My business is purchasing goods. So my goods are increasing in the purchase. What is the name? What is the name of the event? Of goods purchases. Purchases account debit. 2. 2 refers to what? Credit. 2. What is happening to my cash? My cash is declining. 2. Cash account. What is the amount? Amount is 7,000. Amount is 7,000. See this? Here, you write the direction. Goods purchased for cash. Goods purchased for cash. Goods purchased for cash. Okay, and I will not. This LF column is meant for recording the name of the. LF stands for ledger folio. It is meant for recording the page number of the ledger. But here it is not in to practice this. Why? Because see, first you will pass journal entries, then you will post to the ledger. After passing the journal entries from here, you will transfer this to the ledger. To which page I am transferring that? You will write that page number. For example, see, after passing the journal entries, this is my book. Okay, ledger book. What I am doing, this journal entries I am transferring to page number 197. I will write here. I will write here page number 197. Where is my cash and capital? What I will do, I will open page number 197. Okay, for easy reference, this is been made. But this is not in practice now. Okay, so you need not worry about this column, LF column. You need not worry about the LF column. Okay, so okay, now moving on to the next entry. Okay, this is December 1st entry, December 3rd entry. Okay, next is what? I'll write this board. Okay. Okay. Next is here. Next entry. Third transaction. Okay. So I'll write the board. Third transaction is, what is the third transaction? Third transaction is sold goods for cash rupees 5,000. Sold goods for cash rupees 5,000. What is happening here? Each and every transaction will have how many effects? 2 effects. Take up any transaction. It will have how many effects? 2 effects. Right? 2 effects it will have. Now here, sold goods for cash rupees 5,000. Okay, you have sold the goods. So, what is happening to my cash? My cash is increasing. Cash is an asset. Cash is an asset. And my goods are decreasing. I cannot write goods here. What should I write here? I have to classify this. I should categorize goods into what? Either purchase or sale. I should write the reason. My goods are declining. I cannot write goods here. So, what am I doing to my goods? I am selling. I am selling. Okay? Sale. Okay? So, my cash is increasing and my goods are declining. So, cash is what? Is a asset. Goods is also a asset. Goods is also is what? Asset. Okay? So, what is happening to my cash? My cash is increasing. Increase should be debited. Okay, and decrease in asset should be credited. Decrease should be credited. Okay, so cash account debit. What is the date of the transaction? Date of the transaction is December 5th. Cash account debit to sales account. Cash account debit to sales account. How much amount is how much? 5,000. How much amount is? 5,000. I got this. Rupees 5,000. Okay, next journal entry. Narration. Goods sold on cash. Goods sold on cash. Okay, next journal entry. What is the date of the transaction? December 12th. Purchase goods from Mohan on credit. Okay. Purchase goods from Mohan on credit. It's a credit purchase. Okay. You are purchasing goods from Mohan. Mohan is a creditor. Business is purchasing goods from Mohan on credit. Who is Mohan? Mohan is a creditor. Okay. So, here I know the creditor name. So, directly I can write his name. If I am not aware of his name, if my business is not aware of the name of the creditor, I can write here creditor. Okay? But here, we are aware of the name of the creditor, supplier. So, it has resulted in increase in liability. Okay? Increase in liability. Okay, purchase goods from Mohan on credit. And my stock of goods is increasing. And my stock of goods is increasing. But I cannot write here goods. Instead, what I should do? I should write the reason here. I should write the event name. Okay, what am I doing? I am purchasing goods. I am purchasing goods. So, for goods either purchase or sale you should write. And my liability is increasing. debited. So what is the journal entry? Date is December 12. December 12. Purchases account debit. Purchases account debit to Mohan account. How much? To Mohan account. What is the value of the goods which is purchased on credit? Rupees 4,500. 4,500. Write the narration. Purchased goods on credit. What is narration? A brief explanation to one entry. Purchase goods on credit. What it is? Purchase goods on credit. Okay, now move on to the next transaction. Sold goods to Sohan on credit rupees 5,000. Next transaction is sold goods to Sohan. Okay, so you should keep the question with you. Okay, only then you can understand. Next transaction is sold goods to Sohan. Sold goods to Sohan on credit rupees 5,000. So what is happening in this transaction? Business is selling goods. Okay, goods is a asset. So there is decline in my goods. I cannot write goods here. What should I write? I should write the event name. What is the event name? Sale. What is the event name? Sale. Okay. The name of the event is what? Sale. Okay. Sold goods. Sale. My goods are declining and it has led to the creation of one more asset called as data. Data means what? Customer. When you sell goods to your customers on credit, they are called as what? Datas. Here, when I am not aware of the name of my data, I can write it here as data. But I know the name of the customer to whom my business is selling goods. What is the name of the customer? Sohan. Sold goods to Sohan on what? On credit. Okay. So when it is a credit sale and when it is a credit purchase, the name of the person will come. Cash is not involved in this. Why? Because we are selling goods on what? Credit. But here in the fifth transaction, I have sold goods on cash. So it had effect on cash. Cash came in to the business. My cash is increasing and the sale of goods was declining. So I have credited sale. But here it's a credit sale. So instead of cash, what I should write? I should write the name of the person to whom I am selling the goods. Right? So you have sold business has sold goods to Sohan on credit. Cash is not coming. The goods balance has declined and it has led to the creation of one more asset called as data, that is Sohan. In future I will receive the cash. In future he has to pay me the money. He has to pay the money to the business. So it is an asset. Data is an asset. So what is the date of the transaction? December 6th. Okay. So here Sohan increase there is increase in the data. So increase in asset should be debited and decrease in asset should be credited. So what is the journal entry? Sohan account debit. Sohan account debit to sale account. Sohan account debit to sale account. What is the narration? Narration is explanation to an entry. Okay, sold goods to Sohan on credit. Sold goods to Sohan on credit. What is the value of the goods which is being sold on credit? Rupees 5,000. So 5,000 on the debit column and 5,000 in the credit column. Okay. So now moving on to the next journal entry. Next journal entry is Okay, payment of wages, fees, expenses will have effect on what? Will have effect on capital. Will have effect on capital, and it will decrease our capital. See, and it will decrease our capital. Business had paid wages. Okay, worth of rupees how much? Rupees 4,000. It has paid wages. I cannot write here capital. I should write the reason why my capital is declining. What is the reason for which my capital is declining? I have paid wages. Okay, how you wrote for goods, in the similar way, I cannot write here capital. My capital is declining. Right, I cannot write here capital. I should write the reason behind. I should write the reason. I should mention the reason for which my capital is declining. Why my capital is declining? What is the reason my capital is declining? Company has paid wages. Company has paid what? Wages. Okay. So decrease in asset should be credited. Decrease in asset should be credited. And decrease in capital. Capital for liabilities and for revenue and gains, the rule is similar. Decrease, it should be credited. Okay? It should be debited. Decrease should be debited. Here, see, decrease in capital should be debited. For capital and liabilities, the rule is similar. Decrease should be debited, increase should be credited. And here, my capital balance is declining. So, decrease should be debited. Here, decrease should be credited. For assets and expenses and losses, increase debit, decrease credit. For capital, liabilities, revenue and gain, increase credit, decrease debit. So here what is happening to my capital balance? It is declining. So what should I do? I should debit. I need to debit. What is the date of the transaction? December 7th. Okay. Wages account debit. Wages account debit to cash account. Wages account debit to cash account. So what is the amount? How much? Amount is 4,000. Amount is how much? 4,000. Okay. So you have to write the narration here. Wages paid in cash. Wages paid. Okay. Wages paid is sufficient. Okay. Next journal entry. Moving on to the next journal entry. Received commission. December 10th. Okay. What is the transaction? Received commission. Received commission. So, business is receiving commission. In the form of what business receives commission? In the form of cash. Okay. And this has led to what? This has led to increase in the capital. The revenue. See, business is receiving commission. It's a revenue to the business. So, this revenue has led to increase in what? Capital. My capital is increasing. I cannot write here capital. Instead, what should I write? I should write the reason for increase in my capital. What is the reason for which there is an increase in my capital? What I am receiving? I am receiving what? I am receiving commission. My business is receiving what? My business is receiving commission. Okay. Here, what is happening to my cash? My cash is increasing. And my revenue and gain, what is happening to my capital? My capital is also increasing. That is revenue and gain. Due to revenue and gain, my capital is also increasing. Increase in asset should be debited. Increase in capital should be credited. One will be debit and one will be credit. Okay. So, what is the transaction? Cash account debit to commission account. What is the transaction? Cash account debit to commission account. What is the amount? 2,000. Narration is commission received. Commission received. This is an explanation to an entry. Okay. Next transaction. transaction is December. Next transaction is December 10th. Paid salary. December 10th. What is the transaction? Paid salary. So due to this transaction, what is happening to my transaction? Capital plus liabilities is equal to asset. Business had paid salary. Okay. What has happened to my salary here? My cash is, your business will make payment of salary, fees, all this in form of what? In the form of cash. This has led to decrease in my cash. Cash is an asset. Cash is what? Is an asset. When business pays salary, what happens? Okay, when what happens? My capital balance will decline. What is happening to my capital balance? My capital balance will decline. I cannot write capital here. What should I write? I should write the reason for which my capital is declining. What is the reason? Salary. Okay. Here, decrease in asset should be credited. Cash is the asset. Credit. Okay. Here, salary. Salary is declining by capital. Decrease in capital should be what? Should be debited. So what is the journal entry? Salary account debit. Salary account debit to cash account. Salary account debit to cash account. How much salary business has paid? 2,000. How much? 2,000. Narration. Salary paid. What is the narration? Salary paid. Okay. Hope you all are understanding. Now moving on to the next transaction. You should write all this in the notes. Okay. All the problems, whatever I am covering, you should all write this in way. You should try to maintain notes. By Sohan rupees 1,500. See, business had sold goods to Sohan on credit. Business had sold goods to Sohan on credit. Now, Sohan, what he is doing? Sohan was our customer. What is in the journal entry? Goods written by Sohan. Sohan was our, who was Sohan? You can see the transaction number. You had sold goods to Sohan on December 6th. Okay. Now, Sohan is what? Sohan is your customer. Now he is returning those goods. So, Sohan is a debtor. He is returning those goods. He is returning. Sohan is what is he doing? He is returning those goods. So, what is happening to my balance of goods? It is increasing. I cannot write goods here. I should write the reason. Okay. So, I cannot write goods here. I should write the reason. Okay. Event name. What is the event? There is a sales return. I had sold goods to Sohan. My business had sold goods to Sohan. Due to defects in the good, due to damage in the goods, he is returning back. Okay. So, there is increase in goods due to what? Due to sales return. And Sohan is what? Sohan is our data. So my data value is decreasing. Okay. So data is also a asset. Goods are also a asset. So increase in asset should be debited. Decrease in asset should be credited. Okay. So the value of my data is decreasing now because he has returned those goods. Okay, he had purchased on December 6th. He had purchased goods worth of rupees 5,000. So after purchasing goods, he found those few goods they are damaged. Okay, so he is returning. So what is happening? His balance is reduced, right, by 1,500. Okay, so what is the journal entry? What is the date of the transaction? December 12th. Okay, so sales return account debit, sales return account debit, okay, to Sohan account. To Sohan account. What is the amount? How much? What is the value of the goods which is written by Sohan? Rupees 1,500. How much? Rupees 1,500. Okay. So what is the narration? Goods written by Sohan. Goods written by Sohan. Okay. Next transaction. Next transaction is what? December 18. Goods returned to Mohan. Okay, we had purchased goods from Mohan. Now, due to some defects, we are returning those goods back to whom? To Mohan. So, due to this transaction, what is the effect? See, take a particular transaction, it will have two effects. Now, business is returning goods to Mohan. Mohan was liability to us. He is a creditor, liability. Now our liability is declining because we have returned those goods back. Because there are few damaged goods, we are returning those goods back. So decrease in liability should be, there is a decline in the liability. And what are happening to our goods? What are goods returned to Mohan? And what is happening to my goods? My value of goods are also declining. My value of goods is also declining. I cannot write here goods. Instead, what should I write? I should write the event name. What is the event name? It is a purchase return. It is what? You had purchased goods, now you are returning. So, Mohan, there is decline in my liability. Decline in the liability should be debited and decline in asset should be credited. Okay? So, what should be debited? Mohan account debit. Mohan account debit to purchase return account. Mohan account debit to purchase return account. What is the value of the goods? What is the value of the goods? The value of the goods is 1,000. Okay? Goods returned to Mohan. Business is returning goods. Goods returned to Mohan. Okay, this is the journal entry. Okay, next December. Next journal entry is December 25th. Purchased furniture from Deepak. This is the last journal entry. Okay, purchased furniture from Deepak. Purchased furniture from Deepak. So, due to this transaction, what is happening? We have purchased furniture. Furniture is a asset. Okay, furniture is a asset. Okay, so business has purchased furniture for what? For cash or credit? Purchase furniture. He has not mentioned cash. If it is purchase furniture for cash, that means you purchase furniture for cash. But here, what is given in the transaction? Purchase furniture from Deepak. He has not mentioned cash. That means what it is? It is a credit purchase. It is a credit purchase. The name of the supplier, creditor, he has given. Okay, so this has led to what? To the creation of the liability. You know what is liability? Debt of the firm. Right, debt of the business. It has led to the creation of the liability. On credit, business is purchasing furniture from Deepak. He has not given, but it is to be understood. When he has not mentioned cash, that means it is a credit purchase. So, furniture is a asset. Increase in asset should be debited. So, the furniture value is increasing. And the liabilities are also increasing. Deepak is a liability. An increase in liability should be credited. Okay. So, what is the journal entry? Furniture account debit. Furniture account debit to Deepak account. Furniture account debit to Deepak account. What is the amount? 5,000. 5,000. Furniture purchase narration. What is the narration? Furniture purchased. Furniture purchased. Okay. On credit. Furniture purchased on credit. Okay. So this is the journal